Hey everyone, it's Shauna the Tax Goddess, and I am so excited to be here today with one of my favorite people, Mr. Richard Oxford. Now, I'm probably going to slip up and call him Rick, but that's because we're on a first name basis, all the good bits. So, Rick is one of our favorite retirement experts, and he has such a wealth of knowledge. So, I am always so happy to have him here with us on Tax Goddess Live. Rick, why don't you give us a 30-second overview who you are and what you do?
Well, I'm a 20-year financial advisor. Been in business for quite some time. Before that, I had a multitude of jobs. This is my third career, which makes life more interesting, right? Anyway, I try to bring that knowledge from owning businesses and managing businesses and stuff to my clients, right? On a personal basis. And I do work with a lot of business owners. That's sort of how Sean and I know one another, among other reasons. And impart that knowledge, right? So when they're talking about business function, I understand what they mean. And that seems to help quite a bit. We do financial planning. We do, and I'm going to say tax planning light, right? I know when a mistake's being made. I know where to point them. I don't, assume that I have all the knowledge, and I know when not to talk. Same thing on estate planning. I work with a lot of estate planning attorneys, good people. Try to find good people everywhere. So I try to pull a good team together for my clients. Shauna being one of those exceptional people in the CPA space and tax planning space that I can bring to the fore for my clients.
And this is one of the benefits of having people that are super smart in their specific industries is that we get to work together, which is always lots of fun. So thank you so much.
Makes you look smarter.
On both ends, brother, on both ends.
Yeah, it's both ends, that's right.
So for our listeners out there today, this event is specifically tailored for business owners who want to maximize their retirement savings and create a solid financial future. We're going to be sharing, of course, Rick's expert insights, as well as some actionable strategies. So don't miss out on this opportunity. Very excited to have Rick here. Now, Rick, I am a big fan of diving into questions, but before we get to technical questions, I have one that you weren't expecting. Are you ready for a question you weren't expecting?
No.
Rick, if you could be an animal, any animal, what animal would you be and why would you be that animal?
There's so many good animals out there. I love my dog, but I'm not a good servant. I am not in that fashion, right? Yeah, right. Always happy. Yeah, dogs, you love to see you come home, no matter how bad you mistreated them when you left, right? Or how long you left them. Probably something like a tiger, and the reason is because they take no crap from anybody, right? You just wish you were able. You just wish you were able to just not have to, to just do your thing. And I'm not talking about hurting people. I'm talking about not having to deal with the things you don't want to deal with. Snarl at them, they go away. We're done. And so that's probably it, right?
That's
be something be a big cat, right? Cats are the coolest because they can, jump 4 times their height.
I didn't even know that. Things you learn. I love it. Well, and Rick, for me, I know the tiger, especially in Asia, is a symbol of power and respect and solidity to the tribe, right? So I can absolutely see that for you, Rick, because you are here. I know you said you're not here to serve, but you are here to serve, and that always makes me happy. I love it. But serve with claws out, protecting your clients. I love it. So.
Serving is one thing; being a servant's another, right? I mean, that's two different things.
100%. So let's jump into it. I'll get you back on familiar territory here. So what is the most common complaint that you hear from business owners?
Oh my gosh, it's always that they're paying more taxes than they should be paying. I mean, it's one thing to complain about the tax code, which you can do nothing about, but the other thing, they all feel that they're paying more than they're required to pay, right? Somehow, some way, they're missing something. That's a general feeling. And I hear it, well, from individuals too, but from business owners consistently.
Yep.
So
Well, and this is so what going along that vein then, what are two of your favorite strategies? Now, of course, we've got the tax end, but a lot of the retirement stuff also helps with the tax end. So, and I favorite is hard because you got to pick two, but what are your two top least known, least used strategies that you find are the most valuable for business owners?
Depending on the size of the business, things change, right? Different things are available to someone with $1 million net than there are to someone with 50,000 net, right? Uh, you know, basically at the very low end, make sure you're getting all your write-offs. We know what all of those are, or most of them are. Make sure you're getting all your write-offs. So I'll typically walk them through that. At the higher end, when you start making money, it's like, well, how much do you like your employees, right? I mean, if you have employees, if you like your employees, we have qualified plan strategies that can maximize the amount of money you can put in a plan. I mean, I had a 40-year-old woman who is a client of yours as well, who was putting 135,000 a year in her qualified plan because it was structured properly. Okay, not everybody knows that. Everybody starts thinking, oh, you're limited to. At the time, it was 18.5, but that's not true, right? I mean, none of us know what we don't know. I mean, that's one of my favorite sayings. We don't know what we don't know. I mean, that's why when I have the deep question, I call my CPA friends or an estate planning friend or a tax attorney in some cases, right? Lord save us. But well, it's true, right? I mean, now we're
Well, you
probably in
call them when
trouble
you need
territory.
them. We love our
That's
tax
right.
attorneys. You call
We
them when
love
you
them
need
though.
them. You
No,
don't
we
want
love them. We love everyone. We love all of y'all. But those would be the two things. The qualified plans that people think they think of it as an IRA. Well, it's built like an IRA, but there's a bunch of different rules that can really benefit an owner significantly, right? Like significantly benefit an owner.
And so give me, because you and I know what you're talking about. What are some of the key terms that if a listener is looking at their own financial advisor, their own CPA, if they're not hearing these terms, what are some of the key terms they should be listening for?
Well, they should be listening for, unfortunately, most CPAs look backwards. Okay. I mean, you're one of the few and some of the other ones I deal with that look forward. Okay. But what you should be talking about is how maximizing a 401k. How to use, if you don't know if you're a smaller with only a couple of employees or a family, which is important, a solo 401k. And what a backdoor Roth is. If you haven't ever heard a discussion of what a backdoor Roth is, somebody's doing you a real disservice, a very big disservice, because I spend a lot of my time every day talking to people about how to undo 401ks that are too big. Okay. And there are ways to do it, but the taxes always get paid somehow.
Amazing. The government has their hand out, Rick? Really? I could never imagine.
Well, I mean, it only works for certain people, but I know one way to not do it. I mean, I know one way to not, other than charity. Charities, that's a whole nother
Different
realm,
path.
which, that's a different purpose. Okay. But, if you haven't heard about would I say a backdoor Roth, if you haven't heard about a solo 401k or 401k or profit sharing plans, if people haven't talked about profit sharing plans and explain the difference between defined contribution, the defined benefit, if all those conversations haven't happened, you have been, I'm going to say, shortchanged, right? Shortchanged.
Well, and this is why we love bringing knowledge, because even if you haven't had those conversations, right? One of the things we often see is you take this today, okay? You're getting this information on LinkedIn. Take this video, take it back to your CPA, take it back to your financial advisor, and ask them, hey, so they mentioned this defined benefit thing. What is this? And if you see the look in their eyes go completely blank, or they have to turn to Google to look that up for you, okay, might be time to find somebody who's more of a specialist in that area and knows those things. So love it.
One of my favorite thing that happens to me, I mean, not so much, it's the least favorite thing that happens to me is I come up and say, hey, Shauna, have you heard about a defined benefit plan? Have you heard about a profit sharing plan? You go, well, no. And then Shauna goes back to her financial advisor, and the financial advisor says, what? I can do that.
Mm-hmm.
Why weren't you, right?
For
Are
the
you going to
past
learn
10
it?
years.
You're
Yes.
going to learn it at my expense, right? You're going to learn how to do this at my expense.
Yes.
So,
very, very dangerous, because you tick
right.
even one wrong box and the whole thing become taxable. You could be banned for life from using them. There's nasty tax consequences if you don't get it set up right.
Correct. Right.
Yeah. So let me switch a little bit to a different topic here. Now, business owners generally they have a financial plan. Is a financial plan only for the business owner? Is it only for the individual owner, like the individual themselves? What kind of financial planning should I be doing for my overall life between business and personal and kids? What kinds of things should I be considering?
Well, for one thing, your financial plan as a business owner or an individual, as an individual who owns a business, let's phrase it that way, right? I mean, owning a business is like owning stock. Okay. You should, for every stock you buy, you should have an exit plan. And I've heard plenty of people say, well, when I die, my kids will get the step up, blah, blah, blah. Okay, that's not a plan. That's just inaction. Okay. Because you own an asset that's called your business, right? Richard Oxford Financial, I own this business. I have an exit plan. Okay. So I'm sure Shauna has an exit plan. She knows how she's going out. Okay. It's an asset. Asset has value today. You have to plan on how to sell that asset. Okay. So part of that, when I own Intel or AMD or a stock, I list it and somebody buys it and there's no thought there. When I own a business, let's say it's a dry cleaner, right? And I've known some dry cleaners that make a whole lot of money, by the way. And so they're very valuable business. They haven't planned on how to exit other than I'm gonna whatever business is worth $1 million. So when I exit, I'll get $1 million for this. How, right? Do you know somebody with $1 million? Do you know somebody? Well, I'll sell it to my employees. How, right? It takes time. Everything in finance, the more time you have, the better result you will have. End of story. The more time you have, the better result you will have. So you need a plan for this, whether some of this involves, planning around, business-owned life insurance policies that can exit tax-free out of the business, right? This lady knows. And this is how, this is the things you need to think about. You should be talking to somebody. You should be talking to an expert, right? If Shauna's your gal, she can refer more than just me. She can refer a handful of people that are very qualified to do these actions. So plan early and plan often. End of story.
And one of the things that we see missed the most about planning, and I love the fact that you're saying plan early, plan often, right? Sometimes plans change and not at your own control. We often see parents that say, yeah, my 18-year-old son is going to buy this business for me, and they make this whole plan. Well, when the son turns 25 and the parents are ready to get out, son doesn't want the business, right? And the employees weren't prepared. And
or
now
they went on and they found something in college that they loved, right?
I'm going to go
here, right? I'm studying medicine, right?
Yeah. So I would almost even go as far as to suggest have a plan A, a backup plan B, maybe a C and a D, right? At least have a couple of options to be able to see, well, what's going to happen. Nobody knows, right? You can walk out your front door and as I always say in my business, you could be hit by the bus tomorrow. You have no clue. Okay, no clue.
I say milk truck.
Milk truck. Fair. The ice cream man. I don't know. It's a great question.
Right.
So you mentioned something that a lot of people they kind of get their heckles up when they hear the word insurance. So can you tell us a little bit about what you mean? Like you were talking about buying the business and tax free. Like, can you tell us a little more about that?
Thank you, because that's a big deal. Remember, I'm a financial advisor. We manage assets. I do insurance. We utilize insurance is an asset, right? Your business is an asset. Cash value life insurance is an asset. Even a term policy is an asset. It's a different kind of asset. Okay. All of these things are assets, and when things are properly structured, you can. There's only a few places to get tax-free growth in which tax-free, not deferred. A qualified plan is deferred, free, zero taxes. There's only a few places. Roth is one of those, right? Roth IRA. The other one is the cash value of a life insurance policy. Now, the cash value of life insurance, I'll tell you, and this is kind of out there, but life insurance policies have been called rich man's Roth for years. Why? Because wealthy people can put $1 million a year into a life insurance policy, earn 7 or 8% on that policy, tax-free growth, tax-free loans. Okay, just like a Roth. Okay, they wouldn't even qualify for Roth. They might qualify for a backdoor Roth, but they don't qualify. So that's one of the planning tools. There's other things. It has to do with documentation and stuff. But one of the planning tools would be to create this pool of money that's owned by the business that has a contract to transfer to the owner at their retirement or at some point in the future. Okay. The owner then has this giant pool of money, if done properly, giant pool of money to take income from tax-free. Okay. So $100,000 a year, you need to earn 125 to have 100 in your hand, unless you're getting that tax-free, right? And if you're getting it tax-free, it's not showing up on your Social Security taxation. It's not showing up on your Medicare, Medicaid, and all of that. Your Medicare. So you're not being burned on your Medicare taxes either. So it's one way to do it, right? There's other ways to do it. You can save it. You can take a loan. You can loan the money. But have you? And I'll ask you this, Shauna, have you ever seen a plan fail because the business failed? Because when the owner left, the person who took over could not generate enough capital to make the payments that they promised for life?
Yep. All the time.
All the time. Because,
yep.
and I know I'm trying to be negative about a second generation, but the percentage of third generation businesses that stay in business is minuscule.
Yep.
So,
well, and I think you hit on something really important, right? Relying on somebody else for your retirement, for your payment, for your livelihood after you leave a business.
That's scary.
Should be a very scary thing.
Even if it's a family member, but you don't know, you have no idea what the economic circumstances will be. It may not even be the inheritor or the buyer's fault. It may not be their fault at all.
Yeah.
We don't control this.
Yeah. Without going on a whole changes. Right. Without going on a whole launch here, and that might have to be a whole separate video here, right, between you and I. The ITR economics impending doom, the economic doom that's supposed to hit us in 2030 as an actual Great Depression again, is pretty scary.
But so that was moved from 2025. In 2015, it was going to happen in 2025. So
we'll see.
This economic doom is always hovering just on the horizon, just over the horizon, right? Yeah. And but it's there. We know it'll happen. It's like somebody said, well, the market could drop. I said, okay, the market drops. Every 4 out of every 5. Every 1 out of every 5 years. It's rhythmic. It just happens that way. We just deal with that. Okay, we just plan for it, and we do our best to not match the drop. Okay, which isn't that hard to do, by the way, unless it happens overnight.
Well, and this is why we diversify, right? We have some in insurance and some in
Exactly.
stocks and some in our business, right? As another asset class. I love it. I love it.
Yes.
Okay,
Yes, ma'am.
so switching subjects again, because this question we get a ton here. Okay, you've got business owners. We're talking about selling. Okay, you've sold the business. You hope you're going to get payments. Okay, in what ways can you protect your income stream? So you can do the insurance, right? What other ways can you protect your income stream?
Well, one thing, it often makes sense to spread it over time, right? So multiple tax years. That's the simplest form, right? But we don't want it to get in that situation where your payment is dependent on performance. Becomes a little bit of a problem. I mean, there are different 1031 exchanges, which is just like a real estate exchange because that's just how they work. Deferred sales trust is a good way to do that. In fact, your people contacted me about deferred sales trust a few months ago. Okay, so somebody had sold a business and was looking for some help. Okay, it's not something I can do, it's something I can refer, and it's something I understand, but it's basically reinvesting your money in a like asset, just like a 1031 exchange on real property. Okay, so you can take income over time. They used to be much better, much better, but they've kind of changed the rules. And you're always grandfathered when you go in, but I mean, these people were coming out basically tax free after 5 or 6 years,
Yep.
and that kind of lapsed. That's not there anymore.
Yeah.
But
The IRS generally doesn't like tax-free 100%. That's why
no, they
there's only
hate that.
really two categories of the
That's
Roth
right.
and the insurance. That's why there's only two. But yeah.
That's why you and I are really get chastised when you say avoid taxes, because
Legal.
that's the wrong
Legal.
word. That's right, legal trouble, because that's the wrong way to look at it, right?
Yes.
It's really what you're doing is you're paying the appropriate amount of tax.
Exactly.
But on the 1031, what it will allow you to do to spread yourself out over 3 to 10 years and still earn 5 or 6, sometimes more percent on the money while it's coming out. So you don't get hit with like, a 30-year-old company's worth of capital gains, right? Which is basically 100% of what you get.
Yep.
Right. And so it puts you into what? Solid 23%.
Well, 20 plus state plus anything else going on top of it.
Oh, yeah, right. Depending on what state you're
yeah.
in, right? You could,
Yep.
you could be in California, New York, New Jersey. Yeah, way up there.
Yeah.
So, and there's other planning. You could do opportunity zones, and it's about reinvesting the money properly. You could sell out to an ESOP, which I mean, I have that listed. But that takes time, right? You got to plan for that. That ain't going to happen overnight. Plan early,
Right back
plan
to
often.
planning. Right back
you need probably, what would you think? 10-year horizon on that?
An ESOP minimum 5. Yeah, 10 is better.
But I'm saying for it to work really good, 10-year horizon. So if you're in your 50s and you plan on retiring before you're 70, yeah, it's probably a good plan. And then you got to decide which employees, who gets what, and right. So it takes more than that. You can always do charitable stuff that can reduce taxes. Charitable remainder trusts are a good way to take taxable income out of it, but it does reduce it. Not everybody needs all that money, right? They made their money, and it depends on you. I know you go through this a lot because I've seen your questionnaire, which is like my questionnaire. It's like, okay, tell me your life story, tell me everything you got, tell me what your intentions are, tell me who your loved ones are, and we'll talk about a plan, right? Because all of those things are important. It isn't how much money you have. How much money you have is one of the last questions I ask somebody.
100%. 100%. Well, and it just can't be cookie cutter, right? I mean, sure, you can go and get a cookie cutter plan. You can go and get a cookie cutter 401k. You can go and get a cookie cutter, tax hive tax plan, like whatever. You can go and get the cookie cutter one. Absolutely. If you're a small business and that's all you need, both Rick and I, you and I refer people out for that. You need the cookie cutter. Go use the cookie cutter. Okay.
The cheapest way to get it done.
$2,500 and you're done and you're done, right?
Right.
However, what really triggered me, Rick, when you were talking there, is that if you were looking to have your goals met, because everybody's goals are different. I want to build an empire. I want to get my kids to college. I want to put me through retirement. My kids can earn their own money, right? I want to travel around the world for a year on a boat. Every single person's goals are different. And if you're using cookie cutter plans, no matter whether it's about retirement or tax or anything else, cookie cutter plans will not get you custom goals, right? That's like hitting your head against the wall and expecting a different result. It's the definition of insanity. Okay. So one of the things I love, Rick, that you mentioned, right, is that you've got to know the person, you've got to know what they want, and then you start looking at which of all these tools apply to that specific situation, because they don't all. Right. I don't know. Yeah, Rick, I don't know if you have a number. In the tax world, we use a little over 2,000 strategies, but not all 2,000 apply to every single person. I don't know if you have a number like that, Rick, on how many strategies there are in the financial world. I mean, I feel like it would be astronomical.
No, not at all. Are you hearing me?
Yes. Yeah.
Okay. It just sounded like there's nothing there. Yeah, and I agree with that. Same thing with finance. Somebody says, oh, and I'm going to use this as an example.
Yeah.
Because I tend to agree a lot, but annuities, I heard annuities are bad. And I always respond the same way.
It depends.
Some are, okay?
Fair.
But it's a tool. It's a tool. Okay. So if I go to my toolbox and I have a screw that I want to screw into the wall to hang a picture on, okay? And all I have is a hammer, and I take that hammer and drive that screw in. Did I get the job done? I could probably hang that picture, but it's just marginally. And so when you choose the wrong tool, you're going to get a less than stellar result, right? All tools don't work. Okay, sometimes it's the perfect tool, okay? But then again, some hammers are better than other hammers, right? They're both hammers, but some are better than others. The same I'm talking to a lady the other day, 3 annuities, 4 years. 1.13% is what they'd average for 3 years. Okay, we're talking. We got a planning solution going. Okay, but that just okay. Bad.
3 years.
Well, what's funny is the same person sold these products to them, sold the products to them. Same person at about the same time and the same product, right? So this was a person that had one hammer. Right? That's like a tax preparer who says, yeah, I'll do your taxes, give me your stuff, and inputs it all, and says, oh, you could put 6,000 or 7,500 or X into your IRA, and that's the whole planning, that's the whole solution. They never ask a question. They didn't say, did you write your phone? Did you put your phones in your business expense? Do you have a home office? You don't ask those questions, right? And so that's when you only have one tool, one solution. And that's what we all have to watch out for, is look for people who are broad enough and have enough relationships to get the job done well.
Surrounding of experts. We love working with a surrounding of experts. And Rick, and that's why thank you so much for your time today, because
I appreciate it. I really appreciate that. This was fun.
Oh, I'm so glad. Well, listen, everyone, our point here in bringing education is to bring up a couple of terms, a couple of words. If you heard even just one little nugget, that you're going to go talk to your team. And if they give you that blank stare, okay, reach out. We've got Rick's information down below. And of course, I'm super easy to find, taxgoddess.com. Definitely want to make sure that for those of you that do not know yet, Tax Goddess has a new app out. It's called Cash Goblin. Helps people specifically with automating the saving of money. So it is in beta launch right now, Cash Goblin. But if you are looking to automate money saving or paying off debt, check out Cash Goblin. And of course, If you're not already a member of our YouTube channel, please reach out. We post tons of education, tips, tricks, tax saving strategies, and experts just like Rick on our YouTube channel. So thank you so much, everyone. Have a wonderful day. And Rick, again, thank you so much. It's been a pleasure speaking with you today.
It was a pleasure. Thank you very much. I appreciate it.
We'll see y'all later. Bye.